Markets in corrective mode as Spanish yields continue to rise. China surprises with export-led March trade surplus. Earnings season kicks off today after the close with Alcoa. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So Scott, we've definitely found ourselves in a bit of a correction here. The Dow closed below the 50-day moving average for the first time since December 20th yesterday. Are you expecting the bears to continue to reign today?
I think a lot of the bears thought that yesterday the action would be much more ferocious to the downside, but we were down only like 120 points in the Dow, and you saw a lot of strength in the leaders. So right now this corrective type action has been healthy and not severe, but there have been some signs to look at in the last 2 weeks to lighten up and get ready. So I think at this point, I think there's a lot more educated people out there, and hopefully in our community, that at least they're not caught in pain and they can embrace this as opportunity.
What have some of those signs been that we could have maybe used as a clue to what was coming?
Well, let's take a look at the chart of the S&P, and I'll show you the different trends that we watched based on your time frame. So if you go to the chart, you'll see here's the macro trend since October that's been intact. You know, not a worry. You could hold, the best in breed stocks as an investor, not a trader. Here's the intermediate trend that we also watched that got tested once. Here, in late February, we held that 1340 before we resumed again. And this is the momentum trend, okay? 2 weeks ago, IBD put us in a rally under pressure as we had 3 days in a row that pressured markets, but it wasn't the end game. It was just kind of like the markets was put on notice, rallied back up, and then on this day, okay, when we broke the 10 and 20-day moving average and broke this momentum trend, that was market correction. That's when we said, if you're a momentum trader, start being net short, start playing breakdowns to the downside, and only buy stocks in very extreme oversold conditions because, when markets are in corrective mode, all stocks typically go down with it, and at some point, the leaders might as well.
Now, if you're a seller of rallies, what levels would you have your eyes on?
Well, let's go back to the chart one more time. If you take a look here, just so there are people that missed the short entry. So if you go, we went from, what is this, about 1420 down to yesterday's low of about 1378. I just want to point out here's the 50-day at 1371. If we get some type of oversold bounce, which we can because the oscillator is like -70, this is probably the area that the bears would come in and defend. Sometimes you retest trend lines. So, for a 45 handle move down, perhaps it tries to bounce up here and retest this. This would be an area that you could re-short the rally if you're covering into this weakness, and that's an area that the bears should defend.
Now, you mentioned that you sort of attribute the lack of ferociousness that we've seen in this correction to the strength of the leaders. Take Apple, for instance. Now, are you watching Apple to buy on dips here?
Well, yesterday was a great example. It was down $8 pre-market with Priceline, with some of the others, and Apple went from negative to positive and pushed to new highs. And if you look at Apple right now, it was a great trade for guys who took it home on Thursday. You had your salvage the trade, and if you went home flat, you were able to make money there. Same thing with Priceline, just to run through. Another strong stock. But a lot of these stocks are starting to get away from the 10 and 20 days, so you could stay with that trend, but if it changes, you have to just be aware and just don't keep going back to the well. And even though these stocks, are the go-to stocks, and that's the reason why I think that the rally didn't, or the correction didn't feel as severe yesterday, is because you had like 8 stocks go positive, high quality names. So at least that's continuing. But if that changes, then I think the nature of this correction will start to get a little bit more, pressure to the downside, or the speed will quicken.
But you don't necessarily have to cash in on the leaders. You took advantage of a stock on the other hand, like JP Morgan, which you bought yesterday. That was an oversold one that you selected. Why'd you choose that one?
Just because it's the leader of the financials, and that group is a bit oversold. So for me, I like to look for cash flow opportunities, and JP Morgan was one of them. I did it small. I used my tier system. If you look at the chart, from 46.5 down to this support level that I drew in morning call yesterday, it was worth a try. We'll see if we could trade it versus that level. And if it can't continue its bounce here, perhaps it does break and go to the 50 days. So at this point, for oversold bounces, you trade a level versus a level until we get a more clear-cut picture. As far as the leaders, if you're still in there, continue to trail them, but make sure you're watching that relative strength or weakness intraday, because the music could turn off at some particular point, and you don't want to be the one holding the bag because they do come down quickly and they are a bit extended right now.
All right, well, we're going to dive into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.